Good afternoon, Market Chameleons. Everyone joining for the first time. Thanks for coming by and watching the Market Chameleon After Hours show with Ryan Mastro. Before we get started, let's take a look at the share disclaimer. Please be aware that neither Market Chameleon, Ryan, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon and OptionsRobot tools and services. With that, one last look at this disclaimer, and let's welcome Ryan to the stage. How are you doing today, Ryan?
I'm doing well. How about you?
Good. Let me share your screen.
Beautiful.
And we're up. We got the Market Chameleon stock screener there, and we're ready to go. What do you have for us today, Ryan?
Yeah. So, well, look, last week we had a pretty good week, right? It was pretty straightforward. I can go over to my chart and just do a quick analysis of, let's see, let's just go to the Qs and analyze what happened last week just to kind of see the perspective. So we had a pretty decent week, right? Basically finished strong. You go over to something like the SPY. We looked probably even a little bit better, right? In terms of, oops, duped it up, SPY, there we go. And again, just really strong throughout the week, and even today was really strong. So, what's on the horizon here? Well, a couple things that I see in this week that are a kind of our stepping stone. That's the Fed, right? So we have a couple auctions coming out. I believe it's the 20 tomorrow, and then the 10 on Thursday. Obviously, nothing going on with the Fed going on Wednesday. But the Fed's really the big component right now. Is what's the Fed going to do? Probability suggests, I think it's about 96% probability that we'll be sitting at 25 basis points down. Very, very small chance that we're going to get a 50. Very small chance. But you never know. We'll see. I think when we look at that, I think the market has been pricing in at least a 25. So I'm not really expecting a lot of fireworks to come from this, maybe even a little bit of sell-on news where we give a little bit back in terms of maybe the market just taking some profits as we get to that point. So I still think there's a ton of opportunity. I think if you look at some of the big names like a Netflix, we've had a significant pullback on this one. This could be a buying opportunity. I'm going to shy away from that from this week, mainly because of how volatile it is and how expensive it is. Right, your $1,200 stock and the options are, I would say, probably about $10, $15 at the money. So I don't want to get anybody into anything like that. Amazon, I thought was very interesting. Had a good run today, pulled back a little bit. You start to look at some of the other bigger names. Obviously, NVIDIA's got to be on your radar as we look at kind of the sideways momentum here. There was actually negative news that came out this morning, and I think that's something that not really overwhelming, right? I mean, that sent the market down, or sorry, I should say sent the NVIDIA down a little bit, but clearly by the end of the day, they brought it right back up to unchanged. So it would really end up being not that big of a deal, at least from the market's perspective at this time. You look at some of the other big names in that space, like an AMD, which is Advanced Micro Devices, and that's looking decent. Maybe something you'd look at back above the 50-day. So these are just kind of charts, trying to get an idea where the market is. Obviously, with interest rates, you may want to be looking at something like the banks. Goldman's been looking very strong. Your Morgan Stanley has been looking strong. Even JP Morgan has been looking very strong. So these are all names that are interest rate sensitive and could be opportunities. But we've also seen some weakness. The home builders, LEN, again, starting to roll over here a little bit. Again, they really ran up pretty strong on the idea of maybe a 50 basis point cut. And when jobs were looking really weak, and now they're kind of rolling over. So this goes through pretty much all of those, like a Pulte, I keep trying to clear that out, PHM, or I think DHI was down pretty ugly here today. So DHI was ugly. That rolled over pretty hard, like a Toll Brothers, right? So all of these charts, even your XHB, which is your home builder ETF, gave back a little bit here today. So even Home Depot, right, which is interest rate sensitive, had a sell-off, but they routed back up, maybe with a broader market a little bit. So some of these names are a little bit more interest rate sensitive. Again, this one's just tied to the housing market and how that does. So what we want to really see here is interest rates go down to help the home builders get more home buyers coming in, right? Obviously, if rates are cheaper, then they're going to want to buy. Now, coming back over to our screeners in terms of Market Chameleon, again, this is one of the first places I go to start to look for ideas and see where volumes are, see what's down on the list here. I like to look at the charts and see if I see anything that really jumps out at me. Obviously, you can go down through the big weighted names, and they're all going to look somewhat similar, all done pretty well. Meta had some negative news in terms of potential TikTok staying alive. So that was down, and then it actually finished pretty strong with the broader market as they bought it. The one that really stood out to me off of this list, and again, I'm happy to go through other names on this list, but the one, Oracle stood out because of last week's, but we'll get into that in a second. But Microsoft is the one that really stood out to me. And, you know, I would say it's been down. Let's take a look at that in terms of the chart real quick and come back to Microsoft. So Microsoft, and when we look at the chart, let me just get a moving average over here. Okay, so I didn't do that. So Microsoft, MSFT, there we go. So we should have the moving averages. So the one thing I did like is that we've been struggling here at this orange line, which is the 50-day. And we're finally on good volume and breaking out, taking out highs and starting to look pretty good. Now, an ATR, which is your average true range on this, I believe is, where's my average true range? There it is. So it's about $8. So when we start to look at opportunities in this, what I want to see personally is if I'm looking at the money options, I think this can rally. You know, how much do I think it can rally? Well, we can look at the stock a little bit closer, zoom in a little bit. Let me see if I can get into zooming in a little bit more. So try to give you a little bit more of a scaling of this. So, okay. So now, again, we start to look at a potential bigger move. I start to see resistance kind of at this area over here. So that's about 520, right? We're trading right now about 515. So that's up $5 under my ATR, which is good, right? So I can get, if I get one good day, we're probably going to be back up into that zone. My next bigger resistance, probably somewhere around those lows and closes right in there. That's about 523. And then I'd probably say, you know, maybe that close up there, that's about 520, 529, right? So we got some room here to run. So anywhere between $5 to $15. So there's a couple different ways to play it. You can play it depending on how expensive it is, and then our implied volatility is not too bad in this one at the moment. So for something like this, if I went to trade it with an entry bot, I'd probably use the high of the day, right? And our high of the day at the moment is, let's see here. Let me zoom in a little bit here. High of the day was, and it'd be helpful if I'm in the right stock. There we go. So high of the day was, let's see here. It's not giving it to me. So let me go back over my charts over here. Other screen. Bear with me 1 second. So high of the day was, and we're looking at a 515.47. So do I have any other resistance areas in that? No, I'm going to go with that. Maybe I'll go a little bit. I'm going to go a little bit higher, 515.75. And all I'm going to do a single option, but I'm probably going to play a slightly out of the money option on this. So the reason is they're a little expensive, right? These is slightly out of the monies. We're talking about $4. So an at the money would probably be about $5, $6 in terms of that. So I'm going to play a slightly out of the money, especially because I think it can move here. So I'll do that with a quick entry. So again, I price slice this, start at the mid, and I work my way up to market. Hopefully I can get a better fill on that one. So that's what I do when I create a position. And then, you know, again, based on my assessment of how far I'm going to run, or maybe my ATR, or if I want to, again, be a little bit more protective in terms of the options. For something like this, I may say, let's see, I think it's going to move a little bit more. So I'm going to do this $15 one. And what I'll end up doing is I'll watch this a little bit. And then if I see anything like I get a good fill, maybe a good roll up $5, again, let me just show this to you. What I did was I selected a $5 move. If the stock were to move up $5, I want to roll my option. So I'm going to roll that up to the at the monies. If it does it again and again, and then the fourth time, so that's giving me $20 of potential movement. If at any point I think it's going to start to reverse or the market's starting to sell off, then I would basically get out of the position or set myself up with a stop. So I can do that pretty easily. So if this, for example, if I get into these 517s, I can quickly create an OR. that if the stock were to drop, let's say, or option value, the one I'm in drops more than, let's see, value loss since inception, let's say 30%. So if I do that and I just simply want to exit all, and I'll do that for quick as well. I'm not going to keep a break-even protection on that, but I will do, I'm not going to worry about that either, and hit create. Okay, so this is an either or. So I get into this option. If I lose more than 30% in my option price, I'm just going to get out of the trade and be done with it, right? So pretty straightforward. I liked Microsoft. Again, this is one I can share with you guys, and I will put this like that, and I'll share this with Will right when I'm done here. So that will go out. You guys can take a look at this. And again, I'll put some more, maybe a little bit more stop information or a stop on each option. So there's a little bit more there. Now, a couple others, and I want to get through a couple names because I found them on the other way I find them in terms of, let's see, options and unusual options volume. I thought was interesting. So I started working my way down through this list. Obviously, in Oracle, I don't believe in the Oracle hype at the moment that they're going to get this contract for $300 billion from OpenAI that can't basically close their own funding round right now. So I think there's a lot of issues there that could raise a red flag. Why Oracle could continue to go down. So I've been recommending basically playing some type of a put spread in there. Right now we have a put butterfly on, but again, a little more complex, a little more time consuming to go through. But a couple other names that caught my eye. OKLO. This one, big volume in here, right? So again, this is from an options volume. Over 300,000 have traded, and there's 115,000 here on the average. So pretty big deal there. So we go back over to Oklo and look at the chart. There was news in this space on something going on with more of a nuclear reserve and really bumping the potential value up for a lot of these companies. So you come back over here and you can see on a big picture, this thing has been off to the races. Now, this is a little bit overextended in my opinion. So if you want to play it, it's not too bad. It's a $95 stock. I may play it with something like an SMR, which is a little bit more of a laggard, right? If we can start to get this going, maybe we can get a run back up into the 52 area from 40. So I kind of like this idea a little bit better. High here is 39.46. We closed at 39.09. So that gives me a little bit of room for me to breathe for this thing to start to break through the high. So let's just do that one, do an entry bot there. SMR, which is new scale, boom. We'll do a condition, say greater than, and we're gonna do that high, 39.45, and I'm gonna add an option. I'll do the 40s, slightly out of the money. Actually, you know what? They have the 39.50s. Let's do those. Those are right at the money at the time. Okay, we're gonna add those, and I'll do a quick, again, does the price slices there. And for something like this, now, I'm gonna cancel this and say no. Now, something like this, when you start to look at your options values and you say, okay, I'm getting into an at the money option on this thing that's trading at, oh, come on, this should have been on OKLO. I just forgot to click the right buttons, go over to look at them. So they're I'm sorry, I'm looking at SMR. Even worse, Ryan. So $39, I'm looking at the 40s, right? Not too bad, or 39.50s. They're not bad. Now, again, what you probably want to look at on the chart is what does this move on average, right? So I want to look at my my indicators, again, the average true range. I'm only moving about $3 a day. So me getting into an option that is, close that out, me get into an option for $1, what I say, these $1.60, that's pretty good pricing. So what do I mean by that? If I can move $3 in a day, right? How much do I need to get 100% of my option in terms of return the value of that option back to me? So I basically need to double my option price, right? That gives me 100% return. So for example, let's say I get in for $1.50. I would need, right, with a 50 delta, roughly a 50 delta. I'm just making a rough estimate there. It's right now it's showing about 48, but let's say 50 delta. Every dollar up, I would make 50 cents. So if I go a full $3 in my option, then I should be at roughly 100% return. So something like that is always good to keep in mind in terms of pricing, a good rule of thumb to look at your, again, you're going to pay over sometimes over that 2 to 1, and you're going to get it under sometimes. But it's a good rule of thumb. When you're getting at like a 1 to 1 ratio, then your option prices are probably a little too expensive given the movement of the stock, and the volatility is really cranked. So you probably want to do something like a spread in that scenario. So something like this, we can roll up to relatively cheap options. So I like doing this one. And I'll go back to my positions and look at my entry bots. So SMR, I'd probably be a little bit more aggressive with this. And if I just do this, I'd probably do like a $2 roll, right? I'm not expecting the world out of this, right? But I want to, let's see, I want to do, actually, I'll stick with this one. So right in here, it's going to say now if I go up by more than $2, I'm going to roll up to the at the monies. And this one, if it goes up by another $2 after that, that's going to be beyond my ATR. And I can always change this to a roll if I feel good about the market, good about the sector, and I want to stay in this one. Now, two others that that I saw were very interesting. Actually, one other I want to mention real quick, because I don't want to go over and I'm going to give time for questions. So if you guys do have a question, feel free to chime in and ask away, and I'll try to get to them in a second. But the other one I thought, let's see, down through here, and I was looking through this list, is this one here, Grab. And the numbers, as you go down, look, these are going pretty crazy in terms of the lift, a Firm, a Rocket, a Lulu, a Naka, NAKA, Quantscape was pretty big. So big volume against your average. The one that stood out to me as I was working my way through this list was Grab. It's a $25 billion company, traded 220,000 options, and it's normally only trading about 38,000. So coming back over here in terms of the chart, just to show where and how, like, you may want to look at this one, this is starting to go a little nuts. We had a inverted head and shoulders, right? And you can see the shoulder here, the inverted head, and then another shoulder. If someone calls it a complex, whatever, I'm not going to be very big on the technicals of that, but typically as a technician, most technicians are going to say you can use two numbers. One is the height of the shoulder, right? So that would be from here, which is about 550 down to about 430, so $1.20. Or you can use the neckline, which is kind of where I'm at right here, right at kind of in that 550 area down to the bottom of the head, right? So that's about 330. So let's just say $2 for argument's sake, right? So the idea then, this could break out above this neckline to get up about $2. So I think we could get an easy $1.50 out of this one. So now this becomes very, very interesting in terms of looking at it in terms of the options, because if I think I can go up 250, how do I play that? Well, again, if I'm already trading $6.16 at the moment, I can buy the $6 option, slightly in the money by 16 cents, and I'm only paying 30 cents for the options. Now, this is not one where you go hog wild and you say, oh my God, they're so cheap, I'm going to go buy 100 of them, right? That's not what we do in this situation. And the main reason is because that's how you blow up your account, right? Because this turns south and you lose the 30 cents, right? One fell swoop goes like that, and you're pissed off, at the world because you overplayed the scenario. So you keep your size, keep whatever you're doing. You normally do 5 lots or 10 lots, whatever. You maybe add a couple more, but you don't go over your position size. If I normally trade, let's say $1,000 per position, then I stay at 1,000. If I normally trade 5,000, you may want to go a little bit smaller, right? Because you're going to be able to have to buy a lot of options to do that. You don't need to do that in this scenario. Again, we're trying to treat this as a business and look at potentially making small money, locking in profit without having to hit for the fences, right? So that's not the goal. The goal is to hit the singles and doubles, occasionally get a triple, and then every once in a while you're going to get a home run, right? That's the name of the game. And the home run is not that you're swinging hard. It's just that the market sets up, the stock sets up, and everything just starts to continue to go. And because of the rolling that we do, how we're rolling our options up, right, it allows us to stay in positions a little bit longer than we would have, because we're keeping our risk to a minimum. So something like this, I could buy an option in here, and again, you could put it in for for tomorrow morning. You can put it in right away. I'd probably just go in and buy the options for 30 cents. They're really tight. I don't really care. I'll put a bid in and just say, I want to buy them custom. I don't want to pay more than 30 cents, right? I'll just put it in for a 0.30, or for, in this case, again, you may just want to do it as market, right? Or a mid market, right? So I think that's something you got to be aware of. Again, you could do a quick, any of that stuff. So if I just say mid market on something like that, on something like this, I think you have to be very careful when you look at automation on very small names like this, especially when you're looking at a chart. So you may want to do a custom management on this, and maybe as simple as 50 cents, or if you want to use something like your option value and say, if I make more than let's just say 50%, right? I want to consider a roll, because when was the last time I made 50% of my option? Maybe it's 100%, right? Whatever you want to do. So something like this, I'd roll up. And for this scenario, we're going to stay in the 19s, and I want to roll up to specific strike. I'm going to go up to the, let's see, if I make 50%, that's going to be that's going to be 15 cents. So we could probably roll up to the 7s, right? Go from the 6 to the 7. So I'm in something a lot cheaper. And if it continues to go, I'm pretty happy about it. So that means I'm in an at the money option. It goes up and I get 15 cents out of it. Nah, you know what? Let's move up to the 6.5s. Let's do that. Okay, so that's my first roll. Now, if I want to stay in the position and continue to go, I can add another one, right? So something like that, I can say, if I do the exact same thing on the 650s, I can say, if I make another 50%, and I say 50% there, I can roll up again, and I want to roll up to the specific strike of the 7s, right? So that allows me to get up to the 7s, and I can create. Now I can put stops on these as well, right? So if I get up here, here's what it looks like, 1, 2, and then I want to probably either do some ORs on these where I put stops on them. So if I lose more than like 20% or 30%, I can get out of them, right? So I can do that later. And then I probably just want to put an exit in here. So if I get up, let's say another, what did we move today and grab? We moved, let me just check on another chart over here. We moved, what was the end of result? We were only up about 15 cents, but we moved about 55 cents. So it's going to take a couple days for that to happen. So let's say if we get up over 7 in terms of our stock value, all right? So we get up over $7, we're going to just consider an exit, right? And I'm going to do that at a quick, and just say I'm happy to get out of the trade. Going from there to 7, and so I got one roll, 2 rolls. I'm sorry, one roll, 2 rolls, and then an exit if it goes up over 7. Okay, so that is that's a just a walkthrough on a couple of trades there, I think, that are very interesting. So a Microsoft, let's just go back through them real quick. A Microsoft I thought was interesting. Rigetti we already had. Microsoft and SMR, 3 good names, I think, have some potential. Cheap play in grab, a decent side because of the industry move, and Microsoft because of the technical move in terms of that. Now, I did want to highlight one last thing that we had talked about last week and the week before that. We've been in this position talking about IONQ, and we took our profits off, right? IONQ basically had another great run today on a follow-up, but we were talking about that. We've been in that position. I think that's in our archive somewhere over here. And scroll down. These are all old. Where's my eyes? IONQ right in there. So IONQ, we had jumped into this when the bot. We had rolled this up. We were in this management bot. It rolled up again. And then we just said, based off of where we were, let's just take some profits. It actually was a pullback that we put a stop in. So it took us down to the stop. We locked in money, right? So, we had a lot of people copy that one. A lot of people, mirror that one and look at it. So that was just an awesome little trade in terms of being able to be in the right position at the right time on the chart with it, kind of just sitting there. We were ready to go with it and got the nice move on the announcement of I think it was something like some kind of a settlement or some type of acquisition they were enabled to do. So that was a good deal there for them. And we were just said, you know what, it took out our levels, pulled back on us by a little bit by the end of the day, and we were happy to take the profits. So hope some of you guys were in that one as well. Will, just wanted to come back. Any questions that you have or anyone else from the audience?
Yeah, Ryan, we did have a question concerning the Rocket. I think that's Rocket Mortgage, RKT. You mentioned
RKT,
showed
yeah.
up. Something that is interest rate sensitive, and do you have something? Would you tend to play this with the options? Use the stock outright? What do you see there?
Well, yeah, I think this is very volatile at the moment because of the interest rate sensitivity. And you can see some like a Rocket or even a SoFi, right? They both done pretty well. SoFi had a little bit more of a gap up today. I don't think we're going to get massive movement out of this in terms of interest rates. I think it's already kind of baked in. So we could see a little volatility on this one. So I personally would probably set a breakout scenario. If I'm in it, then, again, if I'm in options, I would definitely roll the options. If you're in the stock, I would probably, because of the higher implied volatility, let me just take a quick look over on the other screen. Yeah, we're at about 77 vol on the 30-day implied volatility, and that's about mid-range of where we're at. I mean, we can do that. I think Rocket, we had that in here, down in here, right? So, I mean, you guys have it listed as bullish in terms of it. Stock's moved up. It doesn't look bad. But when you look at the chart, just kind of stalling out here, red candles in terms of some volume, it gapped it up, a couple sells. Again, I just think given the sensitivity, it may not be a bad spot where if you're long something. So if you're long a call or if you're long the stock, you may, going into the Fed, maybe consider that as a some type of a covered call or a call spread, something along those lines. So if I go over to RKT and look at the options in here, I'd probably try to spread it off, right? It doesn't look like that bad. You can see in the first week we have like a 97 implied volatility, and the 30-day implied vol is about 77. So I would probably look to be a kind of a little bit of a seller. Maybe again, if you're in stock, you can go out a little bit, give yourself a little time. Maybe go out to like 10.3 and say, I want to sell something out of the money and bring in a little bit of coin in here. So maybe like a 23, if I maybe even the 24s or 25s, if there's enough premium in them, that's 40 cents. So again, 40 cents helps offset any of that drop if it does have something. And the other problem of that is if you do like a call vertical, then you're just capping at 25. So looking at the chart, can it get through that 25 area pretty easily? Probably. I would say if it starts to break out through the high here today, that's 22.56. Again, maybe they try to give us a little bit of a squeeze, right? This thing's already looking pretty good, right? I mean, go ahead. I'm sorry.
Yeah, we had one last question. I know we're
Yeah.
right up against the 5 o'clock with the witching hour. From the fan, he has some HL calls that he's long.
Love
and he
it.
says he's had a nice run with him. What are the things you'd recommend he be looking to do here potentially if he's
So
long call?
I am in this as well. I've been riding Hecla for a while now. I am actually still long the Jan 4.5s, and I am up probably, the most I've ever been up in a silver stock. Let's put it that way, because of how these are moving and reacting. Silver has just been absolutely on fire, and it continues to be on fire. So I think we finished the day. We made another new high in silver, 43, 24 on the future. So that's a really great move, and it continues to go. Now, if you're in calls, there's nothing wrong with rolling them. So depending on which expiration you're in, I would roll them up, and that's what I have to do personally. All I'm going to do is take my Jan 4s and probably roll up to like the 10s or the 9s, just so I have some decent delta, something in the money. And I'm willing to hold these because I think this trend is going to continue. We may have a pullback, right? There's nothing wrong with that, but I want to give myself more time. So depending on where you're at and what you think about the position, if you're in a near term, it may be something you want to roll up and out, give yourself more time. If you believe it's going to continue, if you're far enough out and you're comfortable with it, I would just roll up.
All right, perfect. Another great episode with Ryan Mastro. Ryan, you want to mention a little bit about OptionsRobot, how people can subscribe and...
Yeah, pretty straightforward. Just come over to OptionsRobot.com. A little bit of an informational page on the website. There's several links on there to sign up. You can get a 14-day trial for free. So come check it out. It's OptionsRobot.com. And again, if you want, I can give a discount. We didn't do that last week, but I can give we can do a 50% discount we're still on. I think we're still on. Maybe not. I think we're past our Labor Day special. We're over on that one. So let's do another one. Let's. What's coming up? We can do. Got a holiday coming up or anything?
Well, we have Halloween coming up, but that's
Halloween's a little far away. How about we'll just do October? Actually, it's going to be my birthday in October, so we'll call it just October as a coupon. I'll do a 50% off for anybody that signs up before October, because then we'll go to Halloween. How about that? So before October, we'll give you guys a 50% discount. Anybody that's interested in this. So
all right, great.
I hope that works for you.
Great job, Ryan. So October, anyone who wants a discount on OptionsRobot, it's certainly a program that's worthwhile and will help you manage your positions when you're at work or out walking the dog or doing anything that can't keep your eyes on the market. So great job for bringing that to the Chameleon community and to all traders, Ryan. It's really a great product. Thanks, my friend.
Thank you. I appreciate it.
All right. We will see you next Monday, same bat time. Thanks, Ryan. We'll see you next week. Bye.
Awesome. Thank you.
All right, everyone. Thanks for joining another episode of Unveiling Real-Time Option Strategies After Hours with Ryan Mastro from OptionsRobot. For those that are here for the first time and you've never checked out Market Chameleon, make sure you go to Market Chameleon and click on that free trial button. You get 7 days free trial for all the Chameleon tools and products. Thanks again for joining, everyone. You have a safe trading day. You can check us out tomorrow morning. We're live every trading day at 9 a.m. with Dimitri, and we walk through different tools on the Chameleon platform. We have a nice active community that you can chat with as well. Mike is on today, and Fan, maybe you can join us tomorrow at the 9 o'clock hour. And that, just go to YouTube, MarketChameleon.com, and join the Chameleon community there. All right, everyone, have a safe evening, safe trading day tomorrow. Hopefully we see you tomorrow morning. Bye-bye.